Well, good afternoon and welcome to our next webinar. My name is Laurie Beagle. I'm the Managing Director at Forums International. And I'd like to introduce Angelique Assaf and Mario Maroon from our corporate partners, Cedar, who are going to take you through credit and financial reporting infrastructure in the MENA region. Now, during the session, if you have any questions, please register them on the Q&A button at the bottom. We'll get back to them at either during or following the webinars. So also this is being recorded, so there will be a version of this available on Forums International website and probably the Cedar website. Now, for those of you who don't know us, just a little bit of background. Forums International has been going since 2015, but we've been running forums since 1991. In fact, our oldest forum is 27 years old this year, just had its 157th meeting, so we call it the great granddaddy of them all. And our forums are there to provide opportunities for credit and finance professionals to meet, discuss key trading challenges, of which of course there are many at the moment, also share experiences, and we're very much into creating new and best practice, and most importantly, discuss how to succeed in the future. Attendance at the forums is for credit and finance professionals of all levels, and our mission and our promise to you is that we will never ever intentionally sell to you at the forums. Now, our current portfolio has 10 forums. At the top, we have Workplace Solutions Credit Forum, which used to be the Business and Office Supplies. Further down the list is the Credit Prevention Network Forum, which is new, and that has its inaugural meeting on the 16th of May at DLA Piper in London. So we hope that you'll join us for that. You'll see more on social media as we go over the next few weeks. Other forums span IT to telecoms to pharmaceuticals and cross-industry groups, as well as specialist groups such as the SAP user group for frustrated SAP users. Now, we're very, very proud to have our corporate partners, and we think it's quite a formidable list, as you can see from the logos in front of you. And we are very, very, very proud also that as of January this year, we were appointed a CICM corporate partner. So I'd like to say a very big thank you to all of our corporate partners for all their ongoing support. So we like to think we are different. Our forums are not just learning experiences they are learning experiences, apologies, where the agenda items are decided in advance by the members. They're not death by PowerPoint, they're workshops and interactive discussions. And the sessions are based on 50-50, with 50% being led by subject matter experts. The other 50% is where the attendees share their experiences. Now, if you put those two things together, we believe that it's a very, very powerful formula. As I said earlier, there are opportunities for our members to meet and discuss those issues in their particular sectors. Also to share experiences, challenges, and also any successes that they've found in their own businesses. Our objectives are that our members will gain tools and techniques to help them face those new challenges, increase and enhance personal skill levels. Most importantly is network with their peers, gather information and intelligence in some cases so they can avoid bad debts and fraud attacks, develop those new and best practices, as I mentioned earlier, and help them to improve their team's productivity and the results accordingly. An important measure is when attending a forum is what will be the return on the investment. An investment could be just the membership fee, but more likely the time that you spent at the forum. Our meetings are pre-planned and scheduled a year in advance, so you can get them into your diaries nice and early. We have LinkedIn and Facebook groups in place where we're sharing information on almost a daily basis. We have a very, very active website and a secure members area where all past presentations and workshops are housed. We have a knowledge hub where members can talk to each other on a 24/7 basis, ask questions and share experiences. We're also pleased to offer CPD, CMIC, CICM, CPD points at all our events. We are very, very pleased also to be backed up with some really good industry subject matter experts, and some of those are asked back on many occasions by popular request. Our forums are affordable and, dare I say, in some cases, in a lot of cases, cheaper than training. We also, every membership is for 2 attendees. So give you a little idea of some of the agenda items we've covered over the last few months. It's quite a formidable list. There was a lot more on this list, but I couldn't get it all on the slide. So from everything from cash flow forecasting to cultural differences to GDPR to outsourcing, and also the dreaded B word Brexit, which still is going on and on. So you've got technical and you've got soft skills as well, all covered at the forums. And we'd like to make sure we have a blend there. We have an exciting 2019 coming up, kicking off with our, apart from our normal program, we have a one-day credit card forum on the 13th of March in London. There's an early bird for that to the end of February, so please book. We've been invited to Sofia in Bulgaria by Ingram Micro to run an international IT distributors forum. We are working to expand back our ICT, so Information, Communication and Technology and Electronics Forum. So you're going to see more of that and announcements about some events in Europe. We've expanded our pharmaceutical forum from just wholesalers to include manufacturers. Last year, we ran an Amazon Day, a day for Amazon suppliers, and by popular request, we'll be running that again, and we've called it Amazon the Return. So, and also we'll be running a supermarket and retail day later on in the year. But one of our biggest new arrivals for 2019 is you can now join a forum virtually from your own desk, where travel is a problem for you. It's a bit like a webinar, so we can hear you, you can hear us, you can see all the slides, and you can take full advantage of getting involved in the forums. So in summary, everybody is time poor, so taking time out of the office can be a luxury. However, we believe that coming and joining a forum personally or virtually, you'll get that return back manyfold. Our forums are not just meetings, but they're communities. So as we said, you can talk to each other 24/7. They're a vehicle to learn new skills, address business challenges, and develop those new practices and share experiences. Now, attending a forum for the first time is free. We very, very much want to meet you and for you to meet the members, engage for yourself the benefits before making and committing to join. So I'd now like to hand over to Angelique and Mario, who are going to take you through credit and financial reporting infrastructure in the MENA region. Over to you, Mario, I think it's first.
Yes, thank you, Lohi. Welcome, everyone. My name is Mario Maron, financial analyst at Cedar Rose International Services, where I have been working for around 4 years. My educational background is in banking and finance, and I'm currently specialized in financial reporting. My colleague, Angelique Assaf, will be joining me in this webinar.
Hi, everyone. I'm Angela. I am the data strategist at Cedar. I have been working with the company for around 7 years with a background in math and finance and an experience in research, credit, and data analysis.
Our today's topic is credit and financial reporting infrastructure in the MENA region. We will be discussing challenges in the MENA region and how to overcome them. I will go through the agenda. We will start with a small introduction about Cedar Rose. Then we will define what a credit report is and what does it usually include. We will also discuss financial reporting and its importance. And finally, we will be specifying the challenges faced in the MENA region and some of the solutions.
Please feel free to use the chat box on the bottom of the screen to ask any question or interact during our session. We will either answer you directly or wait until the end of the presentation.
Cedar Rose Internal Service was started in 1997 in the UK and was known under the name of ABI, Arab Business Information. Today, Cedar Rose operates from Cyprus and Lebanon with the motto Strive for Excellence, employing highly qualified and multilingual speaking English, Arabic, French, and Greek staff. The company's main coverage is the Middle East and North Africa, MENA region, aiming to have a worldwide coverage in 2019. One of the company's main activity is researching companies and individuals, collecting data, and providing reports for organizations and companies, guiding investors about the risk level of doing business in these companies or people, and especially in the MENA region.
Well, Cedar Rose is known with the following. It is the largest MENA database in the world. We have over 11 million companies and around 20 million individuals in only one platform. We are also pioneers in business intelligence, data acquisition and delivery. And we are also technological innovators singular to our sector. We are award winners of one of our technology, which is scoring model for credit reports.
So we're going to start now with credit reporting. Credit reporting is an informational report that provides the most up-to-date information about a business, concluding it with a credit opinion, which helps decision makers decide whether or not to grant a credit to a business. What do credit reports usually include? These reports comprise several sections, including the name. I mean by this that the business name as well as registered and trading names provided in English and local languages. The premises, addresses, and contact details that specify the business's location as well as telephone numbers, emails, and website. Also worth noting, the registers, which contains all the company's registered information, such as licenses, chamber numbers, commercial registration, and many other identifiers. After the registered, we move to one of the most important part, which is capital and shareholding structure. This part represents the business's capital structure as well as the company's ownership with their held percentages and shares. We also include the management information, where it will specify the board of directors and the executive management of the company. In addition to that, the report also includes the activity section provided in UK SIC codes, UK SIC, which is a standard industrial code used to categorize and describe what your business does. They are separated into individual groups, and each company will be allocated the codes that reflect their business activity. These codes can also be used for research purposes by any other third party. After finishing with the shareholding and management and activity section, we can move now to the commercial part, which includes the import-export activity as well as the method of payments that the company usually adapt to pay, the trade reference section in which it can introduce the company's supplier and its business relationship situation. It also includes dealing banks, clients, brands, or trademarks that the company owns or uses, as well as the affiliated sister and subsidiary companies. The credit report provides the company's financial information that will be discussed further on this presentation, also identifying any debt or negative complaints found on the company. Finally, we conclude the report with the size of the company, the credit risk, and the credit opinion that should be granted based on all the information provided in the report. Now we're going to talk about the MENA region. The Middle East and North Africa, MENA, is a region comprising approximately 22 countries. When we say MENA, we mean around 6% of the world's population, more than 60% of the world's oil reserves, as well as occupying around 45% of the world's natural gas reserves. So we can say that the MENA region has a lot of potentials. Has it really? Despite all the mentioned resources, the MENA region has been dealing with some serious issues. We can all agree that the lack of transparency is one of the major reasons that makes the MENA region's growth more moderate. One of the main challenges in the MENA region is that companies usually disclose less information than their peers in other parts of the world. This makes it difficult for investors to distinguish between promising and less promising businesses. And this is due to several reasons. One, the lack of knowledge for the businesses in the MENA region. Two, most of the time, the companies don't disclose information, and especially financial information, due to doubting the purpose of publishing these kind of information. At the end, some of the companies in the MENA region don't really disclose information because in some of the cases, these companies are conducting some illegal operations in the region.
Well, if anyone of you is dealing or dealt with a client or a company in the MENA region and faced challenges with them, please feel free to share your experience with us.
Okay, so credit report in the MENA region now. In order to provide business credit reports in the MENA region, one of the main focuses is the source of data. These sources include the local commercial authorities like chambers, ministries, in order to make sure that the company is legally registered. These local commercial authorities usually provide the status of the company, which does not necessarily reflect the operational status of the company. I will surely explain this in details later on. Then it is followed by a general desktop search of the business in the media and online, which is considered efficient to identify and validate some factors such as the business's operation, size, goodwill, and others. Sources also can be published or on demand provided, like annual reports, stock exchanges, group financial information, and even sometimes the company's website. In addition to that, we interview the subject to confirm and update the information, and also to acquire additional information about the company, which is not usually filled in the region at any registers, such as number of employees, number of branches or outlets, or exact type of business activity, because often companies register with a license like general trade without specification of the nature of the business of operation they really conduct. So the challenges, in some cases when compiling a credit report, some challenges occur and make the process much more difficult or challenging.
Well, we will stop now for like 2 minutes so you can share whether you have experienced difficulties in identifying or finding a company operating in the MENA region, or even conducting a credit report on any. Well, for example, if someone of you received old information about a company, which led to a bad decision because the information was misleading or outdated. So this is one of the challenges, I guess. I don't know if any one of you have faced this. Well, I'm not surprised to see that some had a challenge in finding a company in the free zone. So yes, this is also one of the challenges. Now, we're gonna proceed now with the presentation, but please feel free to share your experiences or challenges that you have faced dealing with the company in the MENA region.
Okay, then I will specify some of the major challenges that usually occur during the investigations. First of all, not all the information is centralized in one place, so we have to search by country or even sometimes by jurisdiction within the country, and many times use several sources, as not all the data that we seek to compile a credit would be found in a single repository or source. Then, most of the time, the registration data or any additional information can be found in non-familiar languages, for example, in Arabic, French, or Farsi, and many other languages. In this case, these data should be translated or transliterated so that the analysts can resume their work. As mentioned above, the status of the company at the register is not always reflecting its operational status. I mean by this that sometime in the local commercial authorities, the registered status is mentioned as active, where the company could have already ceased or stopped operation and is actually dormant. Various words can be used or are found at the registers of companies or the commercial authorities, unlike in other parts of the world, where only 2 or 3 are used, such as active, dissolved, or struck off. What are the most common statuses that can be used in local authorities in the MENA region? First, we can see active, which is very common. Expired, a company having a commercial register expired means one of the two things, either not operational and did not renew its commercial register, or it is still operational, however, they need to renew the commercial register as it is like illegal in some countries to operate with an expired register. We have also bankrupt. Dormant is a company that is still registered in the local authorities. However, it is not currently operational. We have also deleted, under deletion. Deleted by law, is when the decision of the deletion comes from the authority. We have also deleted without payment, is when the authority deletes the company's register due to non-payment of legal fines. Also, we have liquidated, under liquidation, under mortgage. It is in the case when the company has to put fixed assets under collateral for any debt payment. And we have under sequester and sold, when the company is sold to another company or person. Another challenge is when dealing with MENA region, some of the data available is not up to date, for example. Like Angela said, at time we have access to data which could be lastly updated in 2010. There is also a common challenge which is when a company refuses to provide any information. And as I said, this is a common situation because the subject company doesn't have enough knowledge about the credit information industry in general. And in particular, also, they think that their data is private and is in fact considered as the company's top secret.
Well, before proceeding, one of the attendees is saying that he has experienced fraudulent accounts and received same account submitted by 2 different companies. Well, I would say that this is a common thing, especially in the MENA region, and we're gonna highlight this point after finishing the financial reporting section. So we will get back to you with an answer. Now I'm gonna share with you some of the ways to overcome the challenges that Mario has mentioned before. First of all, it is highly recommended to consult a data provider with a high coverage. For example, for us at Cedar Rose, since we hold more than 11 million companies in one database, it makes it easier and faster to search and trace a company, since most of the registration details and data are available in one platform. Second, regarding the date of the data, the best solution is to update the information and to certainly provide the date of the data available. For example, also in our database, all the data fields are date stamped. This date indicates the last updating date of this specific data field. Also, a third point, having professional translators could also help in translating and transliterating the information from different languages into one international language, which is English. And this will help tracing companies easier by using the English as the language while searching.
Finally, in case of lack of information, credit analysts with their experiences and qualifications usually check and assess the credit worthiness of the company, assure the delivery of the credit report with a credit recommendation and risk scoring that can be done with as fast as 24 hours in most cases, and helps relieving the credit or risk manager from wasting hours of online searching and letting you concentrate on what you do best. Now we will move to the financial reporting part, in which we will discuss its importance and infrastructure, especially in credit reports. What financial reporting is all about? Typically, financial reporting is based on the company's financial statements, which includes the balance sheet, the income statement, and the cash flow statement. The balance sheet. This statement reports the company's assets, liabilities, and shareholders' funds. It provides a general idea about how much the company owns and owes, as well as the invested amount in the company. Do you know that in the company's balance sheet, you can trace the company's capital and its long-term and short-term debt over the years? You can also track the company's tangible assets, which includes all the properties or all the equipment owned by the company reported on. I will be also moving to the income statement of profit and loss report. It is the reports on a company's income, expenses, and profits over a period of time, such as a fiscal quarter or year. This includes sales and the various expenses, including administrative, marketing, finance expenses, to have at the end the profit before tax, and then we deduct the taxation value to have at the end the profit after taxation, or in some cases, net profit for the period. Let us tackle an important question here. Do you think if we have a high net profit in the income statement, that the company should be granted a high credit? So if you can share with us if you know something about this topic, if net profit, if you have a high net profit usually in the income statement, will lead to a high credit. I personally think that the net profit only cannot indicate the amount of the credit limit to be granted. There are several additional factors which should be included in the assessment of a company in order to provide the correct credit limit. Example, the company's revenue, cash flow, or even its size or the industry. So these factors all together can affect positively or negatively on the credit limit. And now for the cash flow statement. Can we have a negative cash flow? Do you think that negative cash will directly affect the company's credit assessment? So a negative cash flow will directly reflect to us that even if the company has a high turnover or a good net profit, that it does not have cash in hand at the end of the year. The cash flow statement usually provides data about the cash flows from 3 different activities: cash flow generated from operation activities, investing activities, and financing activities. We should also note that a negative cash flow is not always a negative point, especially if it is related to cash flow from investing activities, because it could mean that the company is investing more in fixed assets or other projects. After seeing all the three statements, sometimes we can see a ratio analysis. So after all the financial report, we will talk about ratio analysis now. It is used to evaluate various aspects of the company's operating and financial performance, such as liquidity ratio. This ratio measures a company's liability to pay off its short-term debts as they come due, including the liquidity ratio like current ratio, quick ratio, working capital ratio also. We have also solvency ratios. They compare a company's debt level with its assets, equity, and earnings to evaluate whether a company can stay afloat in the long term by paying its long-term debt and interest on the debt. Solvency ratios include debt equity ratio and debt ratio usually. We have also to add profitability ratios that show how well a company can generate profits from its operations, including the profitability ratios such as profit margin, return on assets, return on equity, gross margin ratio. And the last part in the ratio analysis is the efficiency ratio. It evaluates how well a company uses its assets and liabilities to generate sales and maximize profits. Efficiency ratios also include assets turnover ratio and inventory turnover ratio. Financial reporting, especially in the MENA region now. What do you think that differentiate financial reporting in the MENA region from the whole world? As mentioned before, the Middle East and North Africa is well known of the lack of available data with regards to actual payment times of trading companies. In addition to this, companies in most MENA countries are not required to file financial statements, which makes credit analysis more challenging. In some cases, even if we have these statements, they might not be following the IFRS standards. What I mean is that we could see different types of financial statements where some of them are even in different languages. For example, in the case of most of Francophone companies, we can notice that they have abbreviated balance sheet as well as the income statement, which is mostly divided into two different tables. One table stated as charges or expenses, and the other table as revenues. Companies also rarely post the cash flow statement publicly. In these cases, the financial statements should be transferred onto the international standards, which mean IFRS. After discussing what are the most important factors or field in the financial report, we should also note that in the MENA region, we can face some specific cases where we have the financial information of the company, but the result turned out to be very surprising. We suppose that we have a private company where occasionally they have provided all their financial details, including balance sheet, income statement, and cash flow statement. In some cases in the MENA region, and after conducting all the needed investigation, it turns out that all these financials details were proven to be fake. And also, in some cases, the company having also registration details turned out to be not operating or even not existing. So what we can conclude here that the financial reports or even the registration details should be always checked. For example, when having a certain financial extract or annual report, the auditors mentioned above the report should be checked, and especially if we have an auditor that it is not usually well known.
Well, here I'm gonna go back to one of the comments, which is that some accounts submitted by two different companies that one of the attendees mentioned before. I hope that Mario answered your question and concern, because as you can see, or as you already heard, that some companies do provide fake financial information. So you have to double check with the financials, and especially about the auditors of the financials.
So, what are usually the most important fields when analyzing a financial report? In the balance sheet, the shareholders' equity, in which we can define the total amount of investment in this company, including its capital. In the liabilities, which is usually defined the historical debt of the company, including short-term liabilities that are less than 1 year, or long-term liabilities more than 1 year term debts. In the income statement, we can also track two factors that are essential, and I think that we all know them, the income or the revenue, or also the turnover, and the net profit of the company. This statement usually gives a picture of the business activity through the past year, if it is generating enough or gaining enough for future investments. At last, in the cash flow statement, the most important part is the cash that is generated from the operating activity. I should also note that a negative cash flow could mean several things. Either the company is not generating enough to cover its expenses, or making long-term infrastructure investment, as mentioned also before. In both cases, the company should take some measures, such as increasing its income.
Well, before continuing to the next slide, I would like to answer also one of the attendees, Peter. Well, Peter, usually I don't mention names, but since you have asked more than 2 questions and you have authorized me to share your name, so I'm going to share your name. So Peter, answering your first question about the banks and if they are geared to offer this data to inquirers, and also at the same time, I'm going to answer the 2 questions together. If credit scoring is in banks is systematically in use yet in the MENA region. Well, honestly, Peter, some of our clients are banks, so they do get the credit reports from us, but we don't have really a very specific idea whether they have the reporting system automatically or systematically already regarding the credit scoring. And regarding, do you have an opinion on credit insurance in MENA? Also, I would like to tell you again that the credit insurance companies are also some of our clients. So in fact, we do, as a credit reporters, we do provide them with this information.
So, how can we overcome these challenges and make the MENA region more transparent? After gathering all the information mentioned above, usually a credit assessment will be conducted and a credit limit or a credit opinion will be provided. In case of missing information, such as financial or registration details, some external factors could help overcoming these challenges and assess the company, including 1. Trade rate initiative.
I would like to ask you a few questions. Well, how often have you faced late payments from clients, especially in the MENA region? And wouldn't it be great if you have known in advance and been financially prepared? Would you trade with a company you already know it doesn't commit to payment terms?
Cedar Rose believes that allowing companies to rate their customers' payment performance is both fundamental and lacking within the credit sector. This initiative aims to provide a more efficient and robust credit reporting service. Cedar Rose will use this information to help others make the safest decision possible. It should also be approved by our team of analysts. At Cedar Rose, for the past 20 years, we have been providing a credit opinion in our reports based on the company data that is available from various sources, feedback from trade suppliers, and our specialized knowledge of the region and the industries that operate locally. However, we know that what credit managers really want to know, if they will get paid or not, and under which specific period. What can TRI really provide? By drawing live payment data from trade suppliers within and to the region, the clients will have very valuable information on how long it actually takes to get paid by any one of the companies reported. The more companies who join the trade rate initiative, the better it will work. We also believe that sharing this information through reports will have a positive impact on payment performance on MENA region companies. This can help the business people make better decisions about whether or not to extend credit and on which terms without having sometimes financial information on the company reported on. Using a simple star scoring system, you can rate your customer from 1 to 5 stars, depending on whether their invoices were paid on time.
Well, before proceeding with the other points, I would like to answer also one of the attendees asking how many companies actually share their trade data. Well, in the MENA region, not all the companies do share the trade data. So the challenge is to get the registration information about the companies to make sure that this company legally exists. This is the first challenge. And then to get the non-financial information, such as the number of employees, the size of the company, the operations of the company. And the third challenge is to get the financial information. So if you would like to know statistics, for example, about how many companies actually share the data, I guess it's below 30% or 20%. So this is why this region is very challenging. Also, Peter asked me about credit scoring in banks, if it's systematically in use yet. Well, Peter, now I'm gonna speak about the CR score, which is a credit scoring built by Cedar Rose, and I can tell you about our company and how it is systematically used in our process and daily process. So CR score is another solution that could be used to overcome these challenges in a scoring or a grading system for companies, and specifically the ones located in the MENA region, where most of the information is not publicly available. Cedar Rose has built a model providing a CR score, which is a detailed and algorithmically calculated score that allows you to visualize the risk level of going into business with the company. Investors in this case will be able to critically assess the risk level of initiating a transaction almost instantly using this CR score. What is its most important aspect? It is the fact that it can create a reliable credit score even when the financial information is missing. So what do you think are the most important components behind this scoring algorithm when the financial information is not available? Well, this smart AI technology based on a fixed algorithm combines certain parameters until it concludes a specific score for the company. The mathematical equation behind the CR score relies on several different factors that are carefully analyzed and assessed. One of the ingenious components of the CR score is the fact that the weight of each factor, and this is very important, the weight of each factor is entirely dependent on the level of effect the factor will have on the business. This will allow the scorecard to adjust accordingly and truly give an accurate and reliable scrutiny of the level of risk of a business.
The importance of the CR score is, first, it is an indicator allowing instant decision making. Second, it is accurate and flexible. And it eliminates the need of human intervention and save time for business analysts.
So we were talking now about the CR score, which is a score over 100. Now we will talk about the credit limit. As you know that when doing or conducting a credit report, at the end of the credit report, after analyzing the report, we do provide a credit limit for this business. So we all know that when conducting the credit report and end it with an analysis in order to provide our credit opinion, which includes a maximum credit limit to be granted for this specific business. Now, with all the technologies, it is time to automate this process and eliminate the human intervention, which can be sometimes subjective when providing a final credit limit. Having a CR score, the automated size indicators, and many other algorithms used in the credit reporting process, Cedar Rose also created an algorithm using these factors in order to provide a final credit limit also automatically. It is instant, objective, automated, and accurate. Credit limit is what we should all aim to have when evaluating a credit report, specifically when some data is missing from the report.
So at last, after discussing all the above mentioned subject, we can say that we have covered the credit and financial report in the MENA region, its importance, the challenges faced, and what could be the resolution to make these challenges easier. Thank you for attending today's webinar. Please feel free to ask any question.
I think you have another question that's just come up from Marcel. How do you calculate the credit limit?
Yeah, someone asked about how to calculate the credit limit. Well, the credit limit, as we said, it is similar also to the CR score. They rely on different factors. Some factors have a high weight on the credit limit. They have a high effect on the credit limit, which can be positive or negative. And other factors are they affect less on the credit limit. So basically, mainly the main factors are the financial information, but when the financial information is missing, other factors can be like replacing the missing of the financial information. Operational, for example, the operations of the company is one of the factors, the age of the company, even the shareholders, for example, if the company is like governmental owned or the shareholders are well known, also it does affect the credit limit. And many other factors do affect the credit limit, in fact. So it's like a large calculation.
Well, thank you very much. If there's no more questions, I'd like to a big thank you to Angela and Mario for joining us and a very, very excellent presentation. As I say, the whole webinar will be available on the website in a couple of days' time. I'd also like to thank everybody for joining us. Our next webinars will be on the 19th of March with Delphinus, who's our training partner, and 16th of April with Company Watch. Peter's just a little note on there. Great presentation, guys. So thank you, Peter. And please go to Forums International's website for more details on the forums and our next meeting dates. And we hope to see you soon or hear from you soon. All the very best. Thank you very much.
Thank you, Laurie. Bye.